Good morning. It's Tuesday, November 5th, election day, about 6 a.m. Central Time. I am ready. I've got my Make Silver Great Again hat on here. So overnight, the precious metals are slightly higher after yesterday's flat to weaker session in gold and silver, where copper begins its breakout. And we had discussed copper over the past few metals minutes. So something you guys want to do is definitely throw that copper chart on your platform here and take a look at it, because that is a market that we are identifying and it is gaining some traction to the upside. And it's very important to watch as the correlations between copper and silver have been quite high in the past. So keep a focus on that market. So yesterday here, with the polls tightening over the weekend and into yesterday's trade, we saw an unwind of the Trump trade. At least that's what the news agencies were saying. We saw the dollar index come off. We saw Bitcoin come off. We saw the gold market correct as well. Gold is a proxy of Trump tariffs and things like that, because of the fact that foreign central banks will sell off some of the reserves and increase their holdings on gold because of the fact it's easily convertible into different currencies out there and allows them to operate more seamlessly and also protects them a bit from different elements here as far as deflation and things like that. So was this an opportunity to add, is what many people were asking here, and many of you working with us, you did. And it wasn't based on this election trend whatsoever. It was based on the trend of the market, the strength of the market, and not the election feeling. So I like to see a lot of people working off of their process and executing accordingly. So one could also argue that many of these asset classes had performed exceptionally well leading up into the weeks prior to this election here. And as a trader and as a responsible risk manager, remember, it is essential to practice sound risk management. Many people did reduce these positions as the event arises because of the fact that they caught a large chunk of the trend. Remember, it's not where you want to get in prior to the trend or try and hang on to the end of the trend. It's really the 80% of the meat that really helps and drives people's performance on their accounts. So looking at the overnight price action, so geopolitical risks, those are a factor. They will be shrugged off. You won't really hear about that on the news whatsoever. But we did have crude oil futures up 3% yesterday. There was some small discussions about the Middle East increasing some output. That's why we kind of came off just a touch on the oil market. A small intraday correction yesterday. However, prices are pushing back up just a little bit here in the overnight session. You do have gold, and we've talked about this level 1,000 times, 2750. Remember, we were in that price band, 2,700 on up to 2,750, broke through it, hit all-time highs. Now we backed off a bit here, and we're finding complacency at the 2,750, although I don't expect that complacency to last much more than 24 to 36 hours. I think that a new direction will be found on this market here. Now looking at the silver market, up 16 cents, that's 0.5%, 32.78. The high was 32.80 as of this recording, low 32.35. So that's been kind of a key level of pocket support in that area here, and we are starting to bump up a bit. Yesterday's high was 33.26 will be a resistance point above that. So keep an eye on those levels. Like to see that market trade back over that 33 level here in the early day session here, but we'll see what's going to drive it. Now copper, that's the big standout. It's up about 83 basis points. We're trading at 446.85. High was 448.90, low 442. So this is a market where we positioned early on it because it is a commodity and because it is an inflationary commodity. We were anticipating some kind of recovery in the Chinese markets. We get this shoot up. What you do is you lift some of those positions off, then you wait for that first little dip here to some support levels, and that's where you reinitiate those positions on, and that's called picking and pruning, planting and picking your trades here. So just taking a little bit off here, putting a little bit on. That's the way people should practice sound risk management again. Now looking at the platinum market, small recovery, but anchoring right around that 1,000 level. It did see a washout with the palladium market here. Palladium's chart did go up quite fast, and it is correcting here a bit. So just a breakdown here yesterday. We'll see if some of that washout has subsided itself, and we'll see also if that platinum market can further rise to the upside. So while everyone talks about the election, really it's important to remember that these markets are global and that multiple factors drive the price of the security. Remember, things like crude oil and things like gold and things like silver and copper are much bigger than just the United States alone and different tariffs and things like that. There's a number of different things, and we aren't even the big producers of any of these major commodities here, or at least that we only make up a small fraction of it. So it's important to look globally how things are operating here. That's why oftentimes I just gotta cringe when someone blames like a vague concept like manipulation as the driver of their asset class because of the fact that it's not going up. It doesn't matter if it's silver. I hear the farmers go, these beans are being manipulated and everything else by the USDA and everything else. So, it's just the fact that you really got to get back down to the core principles. Don't be that guy. Be smarter than that. Learn what drives a particular commodity and embrace it. If you're a grain guy, supply, demand, weather, different people purchasing these grains, different things impacting exports, the strength of the dollar index, the weather, everything else. Same thing with the metals markets. You really want to pay attention to things like the Chinese economy, who are the largest consumers of these different commodities. So if you look at the economic news today, we've got a little coming out, but no one's going to focus on it at all. The election's going to take place of everything else. But however, the overnight news, we saw Chinese services PMI data expand to 52 versus a forecast of 50.5. What does that mean? That means that copper futures go up here about 1% on the day. They start to break out to the upside. What tracks that copper market? Your silver market gets a little bit of boost as well. So, you want to pay attention to the global things and how it impacts your different commodities. So we do have the Fed coming out this week. We expect the Fed to cut 25 basis points, but they are kind of thinking now, I think from their perspective, is that they want to be cautious on their easing path. So this inflation looks a little bit stickier than you think as copper futures are reflating, as oil futures are reflating as well. Some of these other commodities are starting to boost up. Look at corn futures kind of pushing back to the upside just a bit here. So, and there's also these fundamental focuses out there like the national debt. And if the Fed cuts too fast, that inflation could come roaring back. So that's where you get, when you get inflation rising faster, that's where you get the drop in the gold silver ratio, and you get copper, you get silver, you get aluminum, you get platinum, palladium, all starting to push up. And they actually go a little bit faster than that gold market. Why? Because of the fact that gold futures are impacted by interest rates, which will start to creep up, which they have been, and the dollar index, which will creep up with those interest rates, and that'll kind of pump the brakes on the gold rally as well. Plus, remember that gold futures have quite expanded very fast. So your longer term targets for the gold market, things like 3,000, get pushed out a little bit where the Fed gets to its terminal rate of 3.25% to 3.5%, and that looks to be well into 2025. So something else to note is that we talk a lot about silver, we talk a lot about gold on here, but I really want you guys to expand into other commodities. Things like start embracing what the price of crude oil futures or natural gas or some of these grains are going. Because if you look at the way things are going, from a long-term standpoint, commodities are truly undervalued. If you pull institutional investors, they have no idea what commodities are. They only know what the Magnificent Seven is. They know what Google, Alphabet, Nvidia, Amazon, Apple, Microsoft, they know what those particular things are. They do not know how these commodities can be capitalized on and can really drive and impact a commodity. So, and when you look at commodities, you want to have kind of two different views on it. What are the shorter term views? What's the cyclical view of these commodities here? What are the short term dislocations that are happening in the market where you get a copper squeeze to the upside, you get this silver squeeze, and then what are the longer term trends here? Which way are these prices going in general? Remember, they are generally rising all together, and many of these commodities are pushing up here and will push up to new record highs here because of the reckless debt fiscally and government spending and things like that. They just can't do anything about it. They've got to increase the asset in order to get the ratio of the debt to GDP ratio down. That's why inflation is here to stay here, my friends. So you got any questions, you give me a call here. You know, as far as levels on this gold and silver, it's going to be a bit volatile here. I'd say you don't want to see gold trade below 27.31. Takes it more to a neutral. 27.08 your key level of support. Old September high 2700 is a key level below that, but it could get volatile, it could get emotional. That's why trimming back a bit of positions might be smart coming into this market. The silver market, you want to see it start to form another higher low on the chart. So if you go back, look at this, look at the August low on silver, draw a circle around it, then go to September, draw a circle around that, go to October, draw a circle around that, look where we're at in November, and see that we got 3 little days down here, okay? Consider drawing a circle around that. What does that mean? 4 lower highs on a chart. It means the price is trending higher, and that's where you get your signal strength and everything else, and you get a commodity that's in a bull market here. Look at the copper market. I think that that's really your trigger for the silver market, and pay attention to other commodities like that platinum market, which are forming a similar kind of structure to that silver market. So got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.